crypto fan, imagine waking up and seeing your portfolio. Bitcoin, Ethereum, XRP all down 3 to 5% in just hours. Gains wiped out like they never exist. Surreal, right? But that's actually what happened this weekend in one of the most brutal flush crashes we have seen in months. It was not just random volatility. This drop had walls moving, stop losses triggering, and traders scrambling to make sense of the choose. In today's video, I'm going to break down what really went down, what triggered this sudden fall, how the market structure amplified the crash, and most importantly, why this pullback might not be the end of the story. Stick around because sometimes the biggest shakeout set the stage for the biggest comebacks. Welcome back to Crypto Buy YouTube channel, your number one spot where we turn crypto choose into clarity. If you're new here, make sure to hit the subscribe button and then hit the bell icon so you never miss these crucial updates. Because in crypto, timing is everything. Today's report is not just a speculation. It's a deep dive into breaking news, unfolding in real time. We are going to unpack the weekend flash crash. What sparked it, why Bitcoin, Ethereum and XRP, other altcoins all tanked at once, and how the market is reacting right now. Plus, I will walk you through the bigger picture, what this means for short-term traders, long-term holders, and whether this was just a stumble or the start of something bigger. Let's jump straight into it. Here's what we know. Over the weekend, cryptocurrencies endured a short drop that wiped away nearly all of the Friday's rally. Bitcoin shot around 2.8%, Ethereum 2.9%, and XRP tumbled to 0.6%. While traditional markets like S&P 500, Nasdaq barely moved an inch. That tells us this was crypto-specific volatility, not just a spillover from global market. So what triggered the plunge? A massive sell-off by a single Bitcoin wall. Reports confirm 24,000 Bitcoin was offloaded in a very short time window, an amount large enough to return order books and thin liquidity. The sell sparked a domino effect of forced liquidations across exchanges. On Saturday alone, more than 550 million in leverage position were liquidated, including 273 million worth of the Bitcoin long and 296 million in Ethereum. That's the anatomy of a flash crash in crypto. One wall unloads, liquidity cannot keep up. Leveraged traders get wiped out, and the whole market spiraled in minutes. Quick selling, thin liquidity, cascading liquidations, it's the perfect storm. Let's rewind to Friday. Federal Reserve Powell spoke at Jackson Hole and hinted at upcoming interest rate cut in the month of September. The market left it. Crypto immediately surged. Bitcoin shot towards 170,000. Ethereum rallied towards a new all-time high. And traders poured back in thinking easy money was about to return, like altcoins. But the euphoria was short-lived. But the thing is, analysts point out the Powell's dovish tone may have attracted a wave of short-term capital, but without strong underlying fundamentals. The rally was fragile. Many traders quickly booked profits. When that wall unloaded 24,000 Bitcoin, the selling pressure started. Here's where it gets interesting. All trackers noticed that the wall did not just exit Bitcoin instant. Much of that capital was rotated directly into Ethereum. That signals something deeper than just profit taking. It's a structural bit. Smart money may be pivoting towards Ethereum, drawn by its staking rewards, growing ETF demos, and expanding dominance in decentralized finance. In short, the Federal gave the market a short-term sugar rush. But walls used the opportunity to quietly shift the balance of power. The flash crash also exposed just how vulnerable crypto remains during thin liquidity weekends. With fewer traders and institutions active, even a single large move can swing the entire market. But beyond the volatility, this event revealed an important trend: capital rotation. So Ethereum showed surprising, bouncing back faster than Bitcoin. thanks to its DeFi ecosystem, staking yield and the momentum of ETF inflows. It's increasingly being treated not just as a speculative asset, but as a yield generation platform. That's why smart money is flowing here. XRP, however, did not enjoy the same recovery. It flipped 4.2% as hopes for a spot ETF approval could, and broader sentiment weakened. Without a fresh narrative or catalyst, XRP struggled to hold investors' attention. So what does this all mean? This was not just another quick dip to buy. It was a glimpse at a structural realignment. The market is showing us that Bitcoin's dominance is being quietly challenged. Ethereum is gaining favor in institutional play. Altcoins rotations or accelerating in ways that could reshape the next leg to the rally. If you're watching this as a holder or investor, take heed. This event are not random. They shouldn't even headlines from the Jackson Hole can reverberate powerfully in crypto when volatility is high. Your key moves: watch liquidity, flash crashes, exploit weak order books, use risk management, deliver tighten stop losses, follow wall movement that often lead, not follow. So for Bitcoin, this might mean short-term pain, but Ethereum's continued inflows suggest long-term opportunity. What about the XRP? It's still hovering in uncertainty amid regulatory haze. So here's the bottom line. The cryptocurrency market just suffered a test, and it revealed fractures in Bitcoin's structure while spotlighting Ethereum's growing dominance. Money is flowing to where utility and institutional trust are building. So here's your move. If you're a long term, this pullback could be a potential entry point. If you trade, watch for lower volatility or reversal pattern on Bitcoin and Ethereum charts. If you are diversified, this market teaches us nothing stays bull forever, and discipline is your best ally. Drop a comment now. Did the flush crush spoke or inspire you? Are you rotating into Ethereum or holding Bitcoin? Smash the like if this breakdown helped clear the fog. Subscribe and hit the bell icon. Tomorrow I will show you which altcoins weather the flush crush and why they may rebound fast. So this is Crypto Boy, turning market choose into clarity. Stay safe, strategic, and always ahead of the curve. Catch you in the next one.